Federal Chairman Powell essentially told the world it has no idea where inflation is coming from. And in turn, the stock market and bond market tanked. We all knew the Federal Reserve was going to lower rates by 25 basis points. That was a given. It was his message that he roundabout way said, we really don't know where inflation's coming from. We don't expect to make 4 cuts next year, instead maybe just 2. And they're probably under all that layer of commentary was we may actually raise rates again to battle inflation. What did the market do? Well, first of all, the bond market, which is a $660 trillion behemoth, largest market on the global earth, tanked. 10-year treasury went to 4.52, which means your mortgage rates will go up as well, which is a slowing of the housing market in the United States. All that. Then you had the stock market basically puke all over itself. But you had to know that was coming because of how crowded the Mag 7 trade has been. How many people have piled in to the Mag 7? I mean, think about it. Every index is dominated by the Mag 7. You drop money into your 401k, you're dropping money into the Mag 7. As we grow as a population and more people get access to investing, the more concentrated, especially using a weighted market cap allocation like the S&P 500 does, the Dow, the NASDAQ do, you're going to have more crowdedness in a smaller group. When 50% of the market moves in the S&P are really boiled down to 10 stocks, you're going to get massive volatility when bad news comes. The bad news wasn't bad news, it was a lack of confidence, and the bond market is reacting to it. You want to know what the economy is doing? You want to know where things are headed? Look at the bond market, study the bond market, US Treasury market, corporate market, high yield market. That's your barometer of where really things are headed economically. The stock market is the stock market. It's an emotional feeling. It's hype. It's headlines. It's a lot of just fluff. And we have been on this ride, AI ride, for a while now. And today, or yesterday, it basically threw up all over itself. Now, does that mean it's over? That we're not going higher? We're going to go lower and lower? No. But we will have to come down a bit more, I believe. And when you look at yesterday's action, 1,100 points down on the Dow, over 700 on the NASDAQ, S&P, quite a few points down. Is it over? I mean, futures are up this morning. Is it over? No, I don't think so. Future, it's a natural reaction. I mean, if you're running an algorithmic high-frequency trading shop, how are you doing this? Well, you trade based on news events. You trade on certain standard deviations lower. We saw that. We saw the buying in overnight come back in. Futures are up. That probably says to everybody, oh, everything's wonderful again. No, that's not. It's going to suck you in. They're going to play you in, and then they're going to pull it right back down. You've got to have enormous, excessive volume to put in a bottom. We haven't seen it yet, but it could be an opportunity for, on the short term, for a move higher. When I use the price range projections, it gives me a really good ballpark to play in. It gives me a better idea how the pitch is coming across the plate. And what I am seeing across the indexes and the Mag 7, even crypto, is lower lows and lower highs. that is a formation of downtrend. I want to see a trend of that to confirm a intermediate trend. Right now, NVIDIA is below its 63-day moving average. That's a trend. That's a negative trend. That's a quarter of the year of trading days. And that tells me that this market, in NVIDIA in this case, is still trending down. It has to break that trend. And we'll see higher, maybe some move up. But the question is, will we see higher highs and higher lows? And will the rate of change in those be higher? And this goes for everything. Indexes, Mag 7, all of it. So is this the time to get in the pool? Or is this the time to sit and wait for the calm to come, the excessive or exhausted selling, and wait for that, and then start moving back in and find certainty? The Fed told you yesterday it has no idea what it's doing. It doesn't know where inflation's coming from. I'll tell you, I'll go down to the grocery store 2 miles down the road here, and I'll point to inflation. I'll go to my gas tank, and I'll point to inflation. I'll go to the services and products I buy for my family on a weekly basis, and I'll point to inflation. They can't figure it out. They're working off data that's just, well, it's not clean. It's not truthful. And they're doing a whole lot of crap that's going to hurt this market. Don't get caught up into it. Subscribe to the Best of U.S. Investors Platinum channel. We discuss all this. It's about making money. It's not about being right. It's about making money. You can have this true belief that all will change because of AI and all this. At the end of the day, market doesn't give a shit. If it wants to go down, it'll go down. Bond market's going to tell you right now, it ain't confident in the U.S. economy. So pay attention. Protect your assets. Protect your family wealth. Live loud.